Hey there, and welcome to today's daily premium newsletter for June 4th, 2018. So the market washed around $15 billion off the total market cap today, as the market failed to maintain the headway we made over the weekend. There seems to be some fear in the market regarding 51% attacks, so let's take some time to explore them and really address the concerns. For those unaware, a 51% attack is a potential attack on a cryptocurrency where an individual or an organization is able to control the majority of the network mining power, otherwise known as the hash rate. This is very bad as they're able to collect 100% of the mining rewards and perform what are known as double spend transactions, which are normally impossible. Now, Bitcoin and other cryptocurrencies are based on blockchains, which is a form of a distributed ledger. These record every transaction made on their network, and everyone is able to see what happens, meaning that no one can spend a coin twice, which is known as double spend. And it was the critical problem that the blockchain solved that had caused previous attempts at a digital decentralized currency to fail. So essentially, with this 51% attack, the party that controls more than 50% of the network's power at any one time can exclude or modify the ordering of transactions, which in turn allows them to reverse transactions that they send while in control, prevent transactions from getting confirmations, and prevent other generators or miners from getting any mined coins, because the attacker can generate blocks faster than the rest of the network. Now, what's important to note is that the attacker does not become omnipotent or all-powerful. Even with 51% of the hashing power, they cannot create coins out of thin air, send coins that never belong to them, reverse other people's transactions, prevent other people's transactions from being sent, and alter the amount of coins generated per block. It's important to note that it's very difficult to change historical blocks, and only gets exponentially more difficult the further back you go. Furthermore, changing historical blocks only allows you to change the ordering of transactions. What is worrisome is that if this attack is successfully executed, it'll be nearly impossible to untangle the mess created, as any changes the attacker makes might become permanent. This is what really worries the markets, as we often hold blockchain up as some miracle technology, but in reality, it too has flaws and potential weaknesses. Thankfully, where we do see 51% attacks, such as Verge, Redcoin, and most recently with Zencash today, we see coins that are small or don't have a lot of hashing power. Recently, a compiled list of the cost of 51% attacks was shared, and it revealed some very telling details. Furthermore, a Brazilian researcher calculated that it would require as little as $55 million to attack Ethereum Classic for an estimated $1 billion in profit. Now, Ethereum Classic has since forked to prevent that sort of attack, but these findings contradict a long-held belief in the cryptocurrency community that a 51% attack would be prohibitively expensive and infeasible. While the Bitcoin network has never encountered a 51% attack, many smaller cryptocurrencies represent prime targets for those with the money and skill to compromise them. Thankfully, these are just road bumps on the highway that blockchain is building. Most large businesses are discovering the vast potential of this technology and are moving towards adoption. Meanwhile, New York State is establishing a task force to study the implications of cryptocurrencies, and one of the US Securities and Exchange Commission's leading officials has been named to a new senior advisory position overseeing cryptocurrency. Moves like these solidify our belief that the SEC, while still in the framework stage, is moving ever closer to common sense regulation. Meanwhile, countries like Norway, Switzerland, and Estonia are already conceptualizing their own digital currency. While Estonia had to delay their proposal following an objection from the European Central Bank, we see an inevitable push towards a centralized crypto euro in the coming years as more countries get on board. We believe the world is moving towards a greater adoption of cryptocurrencies, which in turn will give energy to this sideways market. 2018 is only halfway over, and crypto has many more important years to come. And so this is only the beginning. And so with that, for his thoughts on today's market, I'll turn it over to Doc. Have a great rest of your day, and we'll talk to you tomorrow.
Hey folks, it's Doc for ReadySetCrypto, and just across the board here, we're looking at the watch list of the top 10, and we're seeing pretty much red across the board. All is not lost, however, because this is actually a great time to introduce a little bit of price action to you guys and how to use price action to make decisions. Now, the first thing that most people do when they start to learn trading and to learn charts and try to be able to make decisions with charts is they look at the price and they say, well, I don't know what this is showing me, so what I need to do is I need to add a whole bunch more stuff to this. And so this is where typically people will add more studies and moving averages and indicators and everything to their chart. And pretty much what they're doing is just about everything to obscure what's actually happening to the price. And I say, enough with that. Go back to price and volume only if you can and start to work from this, because this is the one study that will never lie to you. And it's never delayed. The price is what the price is right now. What a lot of people don't realize is that all those pretty colorful studies that are on there are derivatives of the price and the volume themselves. And so as a result of that, they're going to be delayed several days by the time you actually get a signal from one of them. So why not learn the price to begin with? Give yourself a little bit more edge. So let's look down here at EOS. And this one's probably going to give me the best of what I'm looking for here. So we have a descending trend here, which prints a lower high, higher low, higher high. Okay, so we did get a reversal and we did get a breakthrough from that descending pattern. Descending patterns break to the upside just like they always do. Okay, so now what we can do is, now a lot of people will look at this over here and say, oh, big red candle, oh, I'm sad, this is horrible, this is really bad, here we go again. It's happening all over again. Now, what I want you to understand is that, have we seen this before? Yes, we have. So you can go back to, like here, isn't this the same signal here? This was a descending pattern, which started to break to the upside and then rolled over again, and everybody went, oh no, not again. Well, I'm just going to sell out of this position right now. And then what happened is eventually it did break to the upside, didn't it? And that was a major higher low that set up. Or you could go with this pattern as well too, on the hard right edge, and say, oh no, it's a red candle. Let's sell it. And so what we're seeing right now is the same kind of thing. We have not changed polarity. The polarity is still to the upside. So this is still has just printed a higher high, and it's just swinging down from a higher high and is more likely to print a higher low at this point. So what we can do, and this is what I call boxing in the price. So we're going to box in the price like this. Now, I don't know where this is going to end up stopping, but let's just say that it stops right around there. And so what I'm going to do is I'm going to say, as long as the price breaks out and above the top of this, then we have a valid bullish play. If, however, the price either goes down through the bottom of this or prints a lower high and then does that, then that's just an overall lower high in a larger time frame, and this thing's rolling over again. Okay, so this is kind of a decision box where you can figure out what you're going to do. So perhaps you're already holding something long, perhaps you already got in on the breakout, and you're wondering what to do with this. Wondering what to do. Well, obviously, if it's going to break out and go outside the top end of this, you want to hold it. Hold it as long as you can, and perhaps move a stop up underneath that bottom pivot, and just see if you can hold this thing as long as you can. Otherwise, if you went long on the breakout on the higher low, then you'd probably want to sell as the price undercut 13 and say, all right, let's just lock in what we can here. This thing is under the gravity of a bear market once again, so we're going to do the best we can on any pop to the upside, but they may not be as long as we want them to be. Now, one thing I've been showing you guys lately is about futures. So these are derivative contracts, these are futures, and these are on various US brokers. So whoever is able to list an XBT option, or I'm sorry, not an option, but a futures contract, which is based on the CBOE futures contract, which is written in Chicago. So again, your broker has got to be able to cover these. So whether or not it's an Interactive Brokers, or whether you have E-Trade or TD Ameritrade or whatever broker that you're using, so you may not be able to get this depending on where in the world that you're logging in from. Just like a lot of US crypto customers cannot get access to Deribit or BitMEX. They cannot use those platforms. So The derivative picture right now is very much fractured across the world. It depends on where you live, depends on what access to platforms that you get. So I've been talking about Bitcoin futures lately as a superior alternative to going short. So instead of sell to open a position, and there's only certain crypto brokers that allow you to do that, such as Bitfinex is one of them, and Poloniex, I believe, is another one. And not everybody has those platforms, and not everybody should be selling naked coins, because there's unlimited risk to the upside. Eventually, we're going to see a rip your head off rally, and it's not going to be pretty for those that are held short. So again, this to me is a superior alternative for each tick on the price. The futures contract for one contract increments or decrements $5 in value. So it couldn't be simpler to do this. So you just do need to work with your broker to make sure that you do have permission to this. You have to be able to set up a margin account. You have to be able to set up a futures agreement with that broker. And then on top of that, and this is what I'm finding through TD Ameritrade, you have to beg and plead for them to allow you to trade the Bitcoin futures contract. And again, one thing I did confirm is that they do not list the BTC contract. This is TD Ameritrade I'm talking about here. The BTC contract is the huge institutional contract, which is for each one of these ticks $25, which is generally just too big, too much leverage for retail traders. Now, something else that I want to bring to your attention in terms of futures contracts is no weekend. Now, I don't know how long this is going to last, but I want you to notice here that this is Friday. All of this here is Friday's price action. And notice that there's a big gap here. There's a big gap between where the futures contract stopped trading on Friday afternoon in the US and then started trading Sunday evening right there. That's a gap, folks, right there. So this is a little bit inconsistent with the rest of crypto. Again, there's going to be limitations when it comes to derivatives. A lot of derivatives do not trade 24/7, and this is a good example of one of them. But once they are trading, they generally, once they're trading during the market week, so Monday through Friday, you pretty much have contiguous access to this futures contract. So I'll be doing more and more with this as soon as I myself get permission from TD Ameritrade to be able to trade this contract. I thought for sure I had access to it, and I went to place my first trade the other day, and they said, you can't do this. And so I've been begging and pleading, genuflecting in front of the broker, asking, please, please, please give me XBT trading permission. So I'm waiting on that with bated breath. All right, that is it for today's report. Thanks for listening, folks. We'll see you tomorrow.